Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is US CPI Live. Let's get right out to price action. There's no time like the present. We've got a key level coming into play right here for gold. This is a nice Fibonacci retracement zone that I've been watching for quite some time. It's right around 28.7569. Remember, these are demo dollars, but this is sort of a bias signal that I just wanted to take because this is really a big washout beneath yesterday's low for gold. And you can see right now bullion crashing down. And, is there any quarter in sight? We're going beneath that 28.75 zone. If this area does not hold up, then you probably will see a swift correction down there to about 28.57. Interesting time right now for gold. And the way that you would trade something like this is you've got your key macro level that's come into view, and you would go right down to, from a monthly chart to a 1-minute chart just to see what's going on with current price action. And what we have here is a significant sell-off that developed right there, right from about 28.80, and then right now we're down to about 28.73. We're getting a bit of a retracement now. But realistically, without any real volume data to work with on the spot gold markets, it's hard to see if price is in fact becoming exhausted. So we're just going to sort of eyeball this and see what happens, maybe give it a few minutes to get established back up above this line. But realistically, right now, gold is definitely coming off, and it's coming off fairly big, down about 0.81%. You'll also notice that crude oil right here, pre-CPI, is off about 1%. We'll see exactly what we get out of this CPI figure, but not necessarily sure where these markets are going. So good to see everybody back in the room. I'm going to be sort of talking out of one eye and watching that position there out of the other. But remember, these are demo dollars. When we do bring up the white DOM, that's when I'm trading my actual real money, and we're not going to be doing that today. CPI right around there, I'm not interested in that. And with Jay Powell, remember Jay Powell is also testifying in front of Congress today. It could really be a tough day to be trading and get a good look at true price action. But right now, that's an interesting little play that we're making right in front of the CPI figure, which is coming out in about 9 minutes. So good to see everybody back in the room. Team Marina, good to see you, Team Marina. Bobby Bob, always a pleasure, Bobby Bob. I saw Wizard Alvin was on a little bit earlier for the USD CPI in the technical chat page, so check that out if you guys have access. A lot going on today, and CPI and inflation is just an absolutely huge event. There's three events right now that'll shake the markets up. One is going to be CPI. Two is going to be a Fed. Any sort of Fed announcements or Fed interest rate decisions, or really anything big out of Jay Powell's mouth, and the other one's going to be U.S. non-farm payrolls. We had NFP last week. We've got CPI today, and it's interesting. Right now, I'm watching that gold trade. It does not look good. Technically, you need to sweep higher from this zone, or else this could definitely trade down to 28.70, 28.66, something like that. It could happen fast, but the big catalyst, really the big mamu, is going to be that CPI figure that drops in about 8 minutes. So, Martin Hope, good to see you. Martin, welcome. All right, everybody, let's get to it. We're going to be looking at a lot of different strategies here, and we also want to give you a quick primer on CPI and what exactly it can mean to the market. So if you need a place to trade, be sure to check out Switch. Double your deposit with a 100% credit bonus, and that's up to $5,000. So if you deposit $5,000, they'll give you a free margin of another $5,000, and that can get you up and running with some serious purchasing power in really about 3 minutes. So if you're interested in a broker and you do live in a service municipality, be sure to check out Switch. As far as Oanda is going to be who we recommend here as far as our Forex broker in the United States. Pretty darn big brokerage. They got a service suite that pretty much can do anything you want, so just be sure to reach out. If you are in the United States and you don't have access to Switch, that may be a viable out for you if you're interested in the Forex pairs, commodities, a few other things. All right, week 6, so we're already 6 weeks into, about 6 weeks. I'm going to go 6, maybe 7, depends on when exactly you started, but 6 weeks into 2025, and Monday was Super Bowl Monday, the least productive day of the year. So a lot of folks weren't trading. If you were trading, I hope you did well. I was not trading. I was driving through a snowstorm, record colds. I was just telling Team Marina, it's 18 below 0 Fahrenheit here. It's tying record lows, and that's the static temperature. If the wind comes up, it goes to 30 or 40 below. The way that wind chill works is exponential. So if you are in this region, I know there's a few of you out there, stay warm. Stay warm. I got the heater on right next to me, and my feet are still a little cold. So you also got to run your water, make sure your pipes don't freeze. But very, very cold. It's like walking on the moon out there. In any case, yesterday was quiet. Today, CPI, EIA crude oil report. Those are the big news items that are scheduled. Also, Jay Powell is going to be giving his testimony there to Congress. That's going to be interesting. We'll see exactly what happens. So Thursday, PPI. Tomorrow, PPI. That's a big one as well. And then Friday's retail sales. I don't expect much out of retail sales, but these events here, CPI is the big one. You won't get much out of PPI, but the brokers do adjust their leverage during these periods. So understand where you stand at with your purchasing power and what's happened to it going into this key event. The news of the day, there it is. Here's our CPI figures. We're looking for a little bit of a downturn in your yearly, really your adjusted, seasonally adjusted CPI, but CPI, core CPI at least, month over month is expected to tick a little bit higher. That's not good news. CPI month over month looking for 0.3. That's down a little bit. All of these numbers right here, all you got to remember is this. You're looking for just, it's going to be a mixed bag. Nobody knows. You're telling me core CPI is going to go up, but CPI is going to come down? I don't believe any of it, and the markets don't believe it either. Right now, we're waiting to see if that Fed policy has done anything at all to really stymie inflation, and this is the chart that I've been looking at. This is your raw CPI index data, and you can see we've sort of plateaued a little bit going back to last October, but this was just 2024 was the year of inflation, and many people believe it cost the Democrats the election here in the United States, and it darn sure was an absolutely huge issue. But now that we're past the election, we're into 2025, we're starting to say, okay, what's going to happen to inflation? Are prices ever going to come down, or are these entrenched? I don't rightly know, but I think we're going to start finding out here in about T-minus 5 minutes. And then you can see right here, this is the other point I want to make, is you've got your all-time inflation. You can see back in the 50s, 60s, and 70s, not much happened. Then we got sort of a nice 45-degree growth through the 1980s. That was when we introduced credit cards, tried to spend our way out of the recession and the stagflation of the 70s. And then you see an absolute explosion during COVID. That was the era of unlimited quantitative easing, the answer to keeping the world, the financial world, basically from ending during COVID was just to pump the system full of money, and we're still dealing with it. We don't have any answers just yet. Let me see. River Lake, good to see you, River. Hey, a long time. I hope you're doing well. Good one. I caught the live stream, Shane. Yeah, good to see you, River. Hope everything's going well in your neck of the woods and that the move's going well, the relocation's going well. All right, let's get back out to price action and talk some strategy. You can see right here, we're just going sideways ahead of this CPI report on this this key level right there at 28.75 for your gold market. So I'm watching closely. Remember, to hold a position like this into CPI is about as dangerous as it gets. We may just let this one roll just so you guys can see that, yeah, you're up a few bucks and then you're down a ton and then you're up a ton. This is really hard trading right now, and it's because of the economic event. As far as, what else could we be looking at doing right here? You'll see that this is sort of our 5-8-13 strategy. This is a 5-minute chart. This is a video that we're going to be making very soon on the 5-8-13. It's one of my favorite scalping strategies. At least to do on live streams. We've had some pretty good success with it. Just always remember to watch your leverage and be aware of what the strategy is. If you don't know, then don't worry about it. We'll have a video out and you can study it a little bit and see exactly what happened. Riverlay went off the gold standard. Yeah, 1973. As soon as I believe it was Nixon took the United States off the gold standard, we've been floating ever since, and inflation is pretty much the end product of fiat currency. In any case, we were almost in a buy zone right there. You'll notice that our key level was interesting. It sort of lines up with this 5-8-13 buy. Remember, the 5 crosses the 8, and when price is established above all 3 EMAs, then you have a chance really to trade there. So that's one of the strategies that we're looking at, and that gold trade's sort of hanging on. We'll see what happens. As far as the Great Britain pound USD, I did want to highlight this one as well. This is the 920 crossover with RSI confirmation, and we don't really have anything just yet. I was sort of confident we were going to get into oversold territory and then have the ability to buy this thing back. It just hasn't quite developed for us. So I'm kind of disappointed in that. I thought we were going into oversold territory. Remember, with that RSI, you get beneath 30, you're looking to buy. You're in sort of a buy posture. And if you get above 70, you're looking to sell. So not really much there. Of course, we could take this down to really any time frame we want. The 1-minute chart's always sort of a fun one to watch just because you're guaranteed some action. And this isn't really not a bad time frame to be watching right after our CPI. So we're going to wait for that number to drop here in about the next, minute 15, and we're going to see the CPI. I could call it a bomb. It's going to be like a bomb going off on the market. As far as what we're still watching here in our gold trade's broken positive. be very, 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 you can't really hold these positions going into a key economic event, but we'll let it run. I mean, you see, you got about a minute. Gold's ticking higher. Maybe it works, maybe it doesn't. We'll show that one as it unfolds. And as far as the dollar CAD, this is another one that I wanted to watch. 5-minute chart. I was sort of confident we were going to get a little bit of movement and have a chance to trade this one with a 9 EMA. And we're putting a video out Friday that shows you exactly how to trade this using Fibonacci retracements to make your entry points a little bit better than they would have. The basic idea was real simple. There's your swing low, there's your swing high, and I would be looking to connect my Fibonacci's and buy that pullback as opposed to maybe buying right here. We could easily have got that convergence right there. 9 EMA converges with your 38%. That's probably a pretty good scalping entry, but right now we're going to see a major market mover sort of step in. So we're going to dial this dollar CAD down to the 1-minute chart and see what happens. Right there, 8, 7, 6. As soon as you guys see the number, just go ahead and throw it in there. Throw it in the live chat. So I got sort of got it up. Okay, here we go. Dollar CAD. Okay, bang. What was the number? That right there is the volatility. That is the game when it comes down to when it comes right down to brass tacks. And you're holding a position into a CPI number. This is another great example. See that? We go from in the money to absolutely getting destroyed. You have to remember that that is not the way to do business. That right there is indicative of the absolute risk. We go from being up probably, 300 to down 1,000 in this initial move. Doesn't mean anything. So we'll go ahead and let that one roll for instructive purposes. As far as the dollar CAD, you can see we've just broke into overbought territory. So we're going to probably want to sell this thing. And in order to do so, we're going to have to be looking to probably sell a market order. And we're going to be looking to do that when we get a 1-minute bar back beneath that 9 EMA. All right, let's take a look at our crossovers and see how they're looking. Okay, right here, you've got a real serious situation. You got a real serious situation with the Great Britain pound. Right there is going to be your crossover. So there's your cross. What are you looking to do now, though? That's why using something like the RSI is an incredible qualifier. You get to qualify your trades, and what that means is you get an opportunity to figure out what you want to do before you need a signal to do it. And this is a situation where we're deep into oversold territory, so you're going to want this market to rebound. You're going to want the 9 to cross back over the 20, and that's going to get you in a position to maybe just make a trade. But that's absolutely huge. Let's see. We have a question right here. Let me see. Adnan, good to see you. How am I doing? I'm always doing great. It's a little bit early here and cold, but that's all right. We're trading. I'm happy. Let's see. Team Marina Shane, is the spread increasing so much beyond the normal factors for gold? Yeah, remember, anytime you go into something like CPI or an economic event or, Jay Powell and the Fed or the spreads go crazy. And the reason why the spreads go crazy is because the brokers are adjusting their liability. They're I call it balancing their books. Now, I've never worked for a broker. I've really only heard them talk a little bit about what goes on behind the scenes. For me, it's one of those things where it's like, okay, why would the spread go crazy? Well, that sort of represents liquidity. When a broker shows up and they have an order book, they know they've got a bunch of orders in different locations. They've also know they got order flow, new orders hitting the market. And when those markets become less liquid, meaning maybe there's a ton more buyers than sellers or sellers than buyers, then what happens is you start adjusting that spread. And that bid-ask spread essentially starts sucking up orders. And that's to sort of ensure market liquidity. And it also provides a little bit of insulation for the broker so they don't get sided. So the reason why the spreads go crazy, it's a brokerage issue, and it has to do with market liquidity, not there just isn't very much action in the market. Typically, we have balanced markets, especially ones as deep and big as the Forex. You definitely always have buyers and sellers at every price. The problem you run into is with a big key economic event, a lot of times there are no buyers and sellers at a lot of price points. Spreads go crazy, and you get an issue. So you got to watch that. Let me see. US 30, 300. Good to see you, Calvin. 350 pip, 1-minute candle. Let me see. Adnan, Shane, you're still trading manual? I've been trading manual for about 12 years. I could tell you stories, nightmares about automation. That absolutely terrible things happen if you're not on top of your technology. 2012, I'll tell that story sometime. We had an automated strategy. Didn't work so well, and I was sleeping at the time. So I got bad experiences with automation. However, with something like NinjaTrader, you always have automated trade strategies that you can put in. All right, there's your gold. You can see right here, this is textbook. This market got absolutely out of hand. So right now, if you're trading gold, our key level did not hold. There's no wonder why it didn't hold. Why? Because you had a key economic event. Bang, you blew this thing south, and then right now you're still trending south. We'll let it run, see what happens. Maybe we rebound, maybe we don't. But right now it's just wild. It's wild price action. Does anybody actually have? Let me see. Does anybody actually have the CPI number? Let me go ahead and look and see exactly what if I can find it real quick. All right, here we go. Let's have a look here. Take a look at my economic calendar. What do we got? I've been watching the NBA 30-year mortgage rates have been coming down. That's dovish toward the U.S. dollar. What do we have here? OPEC monthly report. Nobody really cares at this point. Let's see. Core CPI. Okay, core CPI comes in month over month higher than expected. So CPI and inflation remains hot. That's not good news. CPI comes in at 3.0% year over year. That means you ticked higher on seasonally adjusted numbers, and then also month over month. Okay, so you got a really hot CPI figure. That's going to be hawkish for the U.S. dollar. We have already seen the DXY. Definitely the DXY has already rallied. This tells you everything you need to know. It's already rallied about 0.5%, something like that. So right now you have a real strong dollar, and the reason why is your interest rate expectations just exploded. So what do you think is going to happen to those rate cut expectations? You can pretty much just guarantee they just got delayed. And we weren't looking for a rate cut until June or July. Hot inflation means a real strong dollar. And the reason why is because the Fed pivots from potentially saying, well, we were on it to cut 3 or 4 times this year to keep that economy really booming. And that's not going to happen now. And the reason why is you can't really cut your interest rates as your inflation's rising. So you can see right there, the dollar index just jumps. The CPI number just came out of absolute nowhere. We were sort of looking for something more in line with expectations. Now, remember, Jay Powell testifies today, and the first question I'm asking him is, hey, why the heck is inflation so persistent? Why haven't you guys been able to get it under control? That was a hell of a number right there. It really was. I mean, that was a big one. That suggests that your purchasing power of the dollar continues to fade, and what that does to everything else. I mean, what would that do to something like the E-mini S&P 500? Something like this, futures. Really destroys it. Bang, bang. That's a potential trend day down if, in fact, you don't get a buyback at all right around the U.S. Open. And the reason why you would get a buyback is you've got to be sort of cognizant of our interest rate expectations. I'm going to run through those in just a second with our odds. But something like this, is this market overbought or oversold right now? I would look at my Forex pairs and say, okay, that initial reaction is a pretty big move. But right now, if I'm trading something like a crossover, my biggest issue is trying to find a time frame that's going to get me into the market. So you can see 5-minute time frame, we're deep into oversold territory. So I'm probably going to spend the next hour or so. What is that going to be? 12 price bars, something like that. You're going to be looking for this market to base and then the 9 to cross the 20. And that may potentially be a day trade for you the rest of the way to the long side. So the real question is this initial reaction really what the market's going to do for the rest of the day? Maybe, maybe not. I would be very careful. I'd be very careful. We see typically a big move, and then we get a reversal on a lot of these key numbers. So we got to watch this. Let me see. Crab dabs, hawkish for the dollar, good for risk then? Well, I mean, there's really no other way to read that. It would be hawkish for the dollar because I don't think we're getting our rate cuts. And right now I'm watching the CME Fed Watch. I'm watching the probabilities, and they're jumping all over the place. So as soon as we get a decent reading, probably another 2 minutes or so, 3 minutes, then I'll pull those up and we'll go through what we think the dollar's going to do here over the next 6 months. But it looks pretty hawkish to me. Everybody else in the world's cutting their interest rates, and the U.S. dollar is, it looks like the Fed is going to be holding theirs at current levels if, in fact, they don't have to raise them. And if they have to raise them in an emergency type of a situation, the markets are going to crash here. Risk assets are going to crash. So we're watching closely. This was a big deal. This is something that we thought was possible. It's not good. It's not good if you're long stocks. This could be the beginning of your correction. And right now we're watching the markets absolutely fall apart. This is right here. See, this would be your E-minis. Let's go to your NASDAQ. NASDAQ futures is off about 1%. You can see you've sort of got your EMA. This is my framework with the Bollinger Bands and your 13-period EMA. Let's take a look at something else here. Let's step back and see exactly where these markets are trading. Now, we talked a lot about equities and the uptrend. You can see over the last week or so, or excuse me, the last few months on the weekly chart, just how ugly. I mean, it really is ugly, bowling shoe ugly. The Nasdaq's been. It's been down. It's been up. It's been down. It's been up. All in all, we're relatively bullish, but this is just absolute chop city, and a lot of it has to do with your tariff situation. A lot of it has to do with the trade war. We're having issues with conductors all of a sudden. A lot of NVIDIA, it seems like there's breaking news on NVIDIA every day, and that is why your big tech's going sideways. It's just it's ugly. Nobody knows really what it's going to do. Now, if you back off and say, okay, don't lose the forest for the trees, is this a great time to be buying tech? Well, I mean, you are buying near the top, but you could definitely say, who cares, Shane? We're in a heck of an uptrend, and we should probably be looking to buy whenever we get an opportunity. Right there was your pullback to 38%, and we're still very, very bullish here, but it's tough to get a great location, great trade location. Yeah, Bobby Bob, Bitcoin, absolutely. I'll pull a Bitcoin chart in 1 second. The US 30, if you guys remember, this was our trade of the week. Put this one out, yesterday. This one came out on Forex Signals TV, and you can see that it really was a fairly easy read. You can see you got a monthly triple top right there at 45,000, 051 to 82. And you're either holding shorts beneath that line, or if you get a daily close, then you're going long. You can see that we are potentially, I mean, I don't want to say you're forming a top, because calling tops is really hard, but there are a lot of sellers in this market, and they're holding shorts, and their back's up against this triple top. So I'm not really interested in buying until we get a big pullback or this triple top is violated. So in my view, in my opinion, if I was trading this like from an investor standpoint, I would just wait. Spike low, triple top, spike high. There's your pullback, 42.5, somewhere in there. That would give you a pretty good trade location, an opportunity maybe to make a little bit of money. As far as the rest of it goes, it's going to be really tough intraday trading as well. You can see right here, there's your 30-minute chart, which is sort of what I base my strategies on during the intraday U.S. session. But this big-time 30 minutes, it's not done going down yet. But this is the range you're going to want to watch. If you don't see a bounce back up into this zone, you almost got to be looking at this to be either a launch point for a huge trend day down, or you're going to see the price rotate back up into this bar and debate these price points. I don't know, guys. That was a really bad CPI reading. That was really hot. It was something that a lot of traders didn't expect. Jerome Powell's got some splaining to do today. I think this is going to be a really difficult day to trade. If you're going to make some money or if you're going to take risk today, that's fantastic. Go for it. For me, I'm probably going to be taking it pretty easy today until this dust clears. This was a major game changer. And so I'd rather step back, look at my macro levels, game plan for tomorrow, and then come in with a lot of confidence to what exactly happened, because I got all day to watch price action and see what happens today. Let me see. Oh, my God, big Bitcoin took a plummet and Ether. That's not good. Let's go ahead and take it up. Bitcoin, okay. That's a crash right there. Wow. 2.5% in 30 minutes, 30-minute bar. All right, so anytime you want to trade something like this and you're interested in saying, okay, absolutely huge staggering move, fall back on your macros, your longer-term view. Always remember, don't get caught up in what's happening on like a 1-minute chart or a 2-minute chart. Actually, I don't know anybody that trades a 2-minute chart, but a 1-minute chart, 5-minute chart, 30-minute. Just go, okay, what's going on in the big picture? Still an incredible uptrend. Are we going to get buyers if Bitcoin comes off big? Yeah. Are we going to get that chance today? Would love it. Would absolutely love it. So even though the carnage really, it's pretty bad in the last few minutes, do we expect it to come off? Well, sometimes it takes a market driver like this to give us a shot to buy. And if you're looking at Bitcoin 86.7, 86.750, that's a beautiful, absolutely beautiful line in the sand. I would say even 89 or 90 is going to give you a pretty good shot. I'm looking for a reason to buy the discount. So is everybody in crypto. The real question is does this CPI, are we going to talk about higher interest rates? Are we going to talk about interest rate hikes? If that becomes the case, what happens to crypto? You probably settle down in quite a ways, because that means the economic cycle is not over. The tightening cycle isn't over, and that can make life really difficult to try to be picking bottoms and tops. Nobody was expecting a rate hike this year. What if we get one? I don't know. Nobody wanted it. We were talking, hey, listen, last September, we were talking about 4 or 5 rate cuts this year. We're talking about leaving 2025 with a prime rate of like 2.25, something like that, 275. That ain't going to happen, not with these numbers. All right. Let's see. Okay, we got a lot of questions here. Let me do my best. JD, good to see you, JD. Welcome. Let me see. Because of the tariffs, no, the tariffs aren't driving prices higher just yet. They're going to say that all day long. No way. What, tariffs go into effect last week? I don't buy that at all. That's what the media is going to say, though. So good observation, Adnan. Absolutely. Let me see. Team Marina, so stay away from anything against the USD today. Well, I mean, you can play against the USD. Essentially, that's what our gold play did, something like this. And you can see prices starting to come back. So, I mean, if we were looking at, say, this 5813, we sort of got away from it. But you can see there's no real trade set up here yet. Look at, you're in oversold territory on 5-minute gold. You're coming back. What happens if that 5 crosses the 8 and you get a little bit of a bid established up here? Then you're going to have a chance probably to take a long. Maybe you caught the bottom. So I'm not saying you can't play against the U.S. dollar today. Just make sure you have a reason to. We don't just step in and say, okay, that's the bottom, because we don't know. But some of these, I mean, they've pretty much all lined you up against the U.S. dollar. I don't have a problem taking it. 5-minute chart, maybe we're 8 or 9 price bars down. Maybe right before the U.S. Open, we get a chance to bid this thing back. The 9 crosses the 20. We're in oversold territory. So, yeah, I mean, you can take those trades. You just got to make sure that you've got your risk sort of in line. You got to make sure that your risk is accounted for. I don't know. I think I'm pulling out today. I don't like anything, and it's not necessarily because of the CPI figure in itself. I don't like the fact Jay Powell is going to testify later today, and there has to be some senators or Congress people that just got the memo that CPI came in extremely hot, and they're going to grill him over it. So I don't know that I want any part of this today. Tomorrow will be good. I know that. So we'll see. Let me see. How about gold? Let's see, Bellahart. Gold. Yeah, I mean, we're long gold. I mean, let's go right here. Really love that for Bitcoin. 89s are probably pretty good for Bitcoin if you get a chance there. Let's go right here. So, I mean, long term, that's what we're looking at for gold. I still say you hit 3,000, but if inflation keeps going on up, that may not be the case. Let's go down to our weekly. Let's go to our daily. I think our daily chart gave us our number. Yeah. So that was sort of the number that we were looking at, really our long-term, sort of our long-term support zone. And, you know, one of the things that happens when you're playing these things, these support and resistance levels, is if you're aggressive, they can take you for a ride. And, you know, we want them to work perfectly, and a lot of times they really do. Something like a daily 62%, I'm always looking at that as being a huge level. I mean a huge level. And right now we've taken it out, but now we're bouncing back up, and it wouldn't shock me if this was going to be a profitable trade. Can you really hold that? That's hard. I can tell you last week I went for a ride on one of these, and it wasn't fun. But if your position sizing is decent, then yeah, you could probably hold it. Do you want to hold this trade the rest of the day or get out now? It's your call. I mean, probably the best thing to do would have been just to rip the Band-Aid off or not hold it into CPI. There's very few people that make a living holding into a CPI number, and that's why. The volume that hits the market means the rest of it doesn't matter. The technicals don't matter when you get that much participation. So I would be really careful. I mean, if you're still long here, I mean, it looks like it's going to come back and win. We probably trade up to 80 or 85 or something like that, but I think that, there's still a lot. There's not as much risk involved right now. I can tell you that. The worst of it's probably over, but still really difficult to hold trades, taking $10 draws and things, unless you plan for it. Let's see. Got a ton of messages here. Let me see. Adnan, 89K or lower for Bitcoin. Yeah, I mean, if you hit 89K or that key level down there at 87, that's a bid. Let me see. Gold getting smoked. USD up. Rust City. I mean, you're absolutely right. I mean, gold's getting smoked right now, but we're coming back. Don't call it a comeback. The number's right back to 275. That's a big level. 2875-ish. That's a big level. See if it gets reestablished up there relatively soon. Let me see. I want to catch XRP at $2. That's an interesting one. Calvin. There's the market cap. Let's go let's see. Tether. U.S. dollars, do that. So you want the pullback. Got a pretty good pullback right there. There was a low. Looks like I had a level up there for something a while back. Right down there, though. This is how I would be approaching XRP. Look what you have here. Just incredible volatility, and then you have a long period of absolutely nothing. Absolutely nothing. What was XRP? Ripple? That was when they were slugging it out with the government. Nobody knew what was going to happen with that between the SEC and XRP, and then you got your big break. So finally, the SEC loses their lawsuits. Bang, bang, bang. Gary Gensler's gone now. They're going to treat XRP or Ripple with really kid gloves. Yeah, I would love that. $2 right in there. That would be your bid. Pretty good. 158's better. Almost got it there. And now the rebound's on. Yeah, I think that if you get $2, yeah, you almost have to back the Brinks truck up there and spend a little bit of money, but I don't know if we get it. I just don't know if we get it. Let me see, Sanjay. Now they will get all the immigrants back and hold off the anti-immigrant drive. Well, I mean, I don't know that immigration has anything to do with CPI just yet, but that's going to be the argument. The argument's going to be, hey, the prices of everything have gone up since the immigration and the deportation started, since the tariffs started. I will bet anybody in here $1,000. Those are the talking points over the next 48 hours. I mean, really, that's what you're going to see in the media if you're not already seeing it. They're going to blame the high CPI numbers. They're going to blame it on the current administration. Is it their fault just yet? No. But if you do keep having high CPI numbers going into, let's say next month your CPI ticks higher. Let's say next month, let's say June. If we're sitting here in June and our CPI keeps moving higher, you're going to have Jay Powell sitting out there going, I have to raise interest rates because these tariffs and social stances are driving prices higher. That's the argument. And what that will do is it will crash everything. And that's sort of what I've been saying the whole year could definitely happen. So today was an eyebrow raiser. That's a horrible number. It's a horrible figure. Let me see. Brinks truck. Back it up. Back up the Brinks truck. Buy some XRP at 2. I like Calvin's call right there. It's a good one. All right. We've given these numbers a little bit of time to settle, but I want to, they're incredibly volatile. You're going to see this number jump everywhere today. It's just incredible volatility right now. These are futures contracts on interest rates. Right here, you got about 35 days until we do our FOMC live again. I'll be here. We'll be here doing it March 19th. Take a look at what we want or what we're thinking is going to happen at that meeting. 99.5% that your interest rates stay the same. Everyone else is cutting. What about May? 87% in May. June. 65% that we're holding firm in June. When are we going to get a rate cut? July, 55%. When are we supposed to get a rate cut? September. The odds of the first rate cut of 2025 right now are in September. You're in for a major bear market here in stocks. I would be very careful holding longs. The whole game just changed. And if you get another hot reading next month, the game will really have changed. So mortgage rates are going to tick back up over 7%. You're going to see a little bit of downward trajectory on housing prices. This transition to the new administration, this is a period of big time change. And one of the things that we thought could happen was the monetary policy. So definitely got to watch that. Let me see right here, Sanjay. Let me see. That's what happened immediately after COVID. Wage inflation was sticky, and the only way managed was by letting in immigrants. It's crazy. Well, I mean, let's be honest. The last 4 years, the immigration situation, the borders here in the United States have been wide open. We've never seen immigration levels like we've seen during the Biden administration, and that has all changed literally overnight. The border's closed. I don't know what happens. I'll say that that was a horrible CPI number, and you're going to see some major pressure. A lot of talking points today, a lot of news. I mean, let's just real quick. Let me see if I can pull something on CNBC. I can almost write the headlines. All right, here we go. Let's just have a look. Dow futures tumble nearly 400 points. Yeah, 409 points, but that's only 0.91%. That's not that bad. What are the headlines? Rise 0.5% in January, higher than expected annual rate rises. 10-year Treasury yields shoot above 4% after hot CPI. Let's see, what does Trump dog say? Trump says interest rates should be lowered to go hand in hand with his tariffs. That ain't happening, not with this reading. They're not lowering anything. They're going to raise them. Oh, man, I'll tell you what, we're going into really, really serious business. Sorry, I'm just marveling at these headlines. Yeah. Used to write headlines, not for CNBC, but all right. All right, guys, I'm going to go ahead and sign off. I'm sort of blown away. I don't really know what to say about this figure other than just be very careful. For me, I'm not trading today. Got a lot of other things I can do. I'm going to game plan. I'm going to wait for tomorrow. If you guys want to trade, do it, but really take care of yourself. Take care of your money. I mean, today, I'm smiling and laughing because it really is. It's really is something. I mean, we just weren't expecting that. You can see that this trade came back to positive. Really difficult stuff. Really difficult stuff. I don't know. Your guess is as good as mine today. Sometimes as a trader, you just got to step off the ball and not take the risk, and that's the best thing you can do. There's an old rule that I live by. If I don't know, I don't. If I don't know, I don't know. And it's one of the things on this stream. I'm not going to sit here and BS you. I don't know. I don't know what's going on right now, and I'm going to wait until I know before the money gets thrown down and we take any real risks. Gold has recovered. Absolutely, Calvin, it has. Let me see. Riverlay, I got a question. What impact, if any, will the front loading of inventory go into tariffs have? I mean, it's a great question, River. I mean, we don't know because the tariffs, what's happening with the tariffs is they're on again, they're off again. So Trump will show up and he'll go, okay, that's 25% on Canada and Mexico, and then when the other side capitulates and they move troops to the border or they appoint a fentanyl czar, and then he walks back the tariffs real quick. So for me, I don't think the tariffs have done anything just yet. The 10% on China, that's definitely going to make for some surpluses in some things and shortages in others. I really don't know. We're going to have to wait and see. Jason Arnett, CPI report means less volume. Yeah, 100%. It means the markets get real thin. That's why those spreads get big and you see big sweeps in prices. That's exactly what happened to gold right here. There were no buyers when that number came out. Funny how that works, and then everybody sort of bought it back since then. We'll see what happens. All right, everybody. Have a good trading day. If you do, be careful. Be structured. Be disciplined. Don't get out over your skis on this one. This is a good day to lose a lot of money. I'm not interested. We're gonna make some money tomorrow, and then maybe make a little bit Friday. Yeah, too early to see the tariff effect. I agree, Calvin. I'm sort of gonna hold off judgment. I know eventually there's going to be some strain on everything, and that's either going to be remedied very quickly by a shift in policy or it's not. And hey, man, I don't know. Right now. Let me see. Adnan, President Trump officially orders 25% tariffs on steel and aluminum imports from all countries next month. Will be messy. Yeah, I mean, that's going to change things. But remember, the 25% tariffs on steel from all countries next month, it's not necessarily going to be on all countries. It's going to go down. He's going to sign the order, and they're going to blast it and have a press conference and say, okay, 25% across the board. But then it's going to be like, okay, if you do this for me, your tariffs go away. If you do this for me, your tariffs go away. And that's going to be really the crux of the negotiation tactics for the next year to 18 months. I really do expect this all to slow down big time in the next 6 months. But this initial 6 months, there's going to be a lot of volatility, a lot of uncertainty. Let me see. Riverlay, true, Calvin, but many businesses would have bought extra inventory as a hedge, I would think. I would think if somebody was savvy and understood what was going to happen, they would have definitely bulked up their stocks and made sure their core business was intact going into probably some of the biggest tariffs we've ever seen. That's for sure. All right, guys, I'm going to go ahead and kick off for now. Fantastic engagement. It's good to see everybody. Got some old friends in the room. Always good to see everybody. As far as trade ideas go, those strategies, they're not a bad way to play today. Right now, you're on a buy with the Great Britain Pound USD 5-minute chart 920 crossover with RSI and also that 5813, and gold just keeps churning higher. You're up to 2880, so it looks like that 75 level eventually worked, but you take way too much heat on a CPI figure to trade like that. That could really devastate you eventually. All right, guys, I'm going to go ahead and sign off. You guys have a fantastic trading day. I'll be back tomorrow with probably some better trade ideas, and we're going to digest this madness because this is going to be a crazy session. Have a fantastic trading day. Trade it well, and we'll talk soon. See ya.